Hi guys, welcome back. Today we're going to be looking at Sofi Technologies. It has been an extremely volatile stock since the beginning of this year. It started off at $10, went about 150% up all the way to $25. Then it crashed another 40% down, came all the way to $15. Then rose another 25%, another 55% up, hit $23. Then it came all the way back down to about $14. Went up to about $17.50 and is currently trading at $16.25 today. It has been a very volatile stock, but I do believe that this price is a very good time to enter the market, especially with the growth that they have had over the past few years and the growth that they are projecting in the future. So today we're going to be doing the stock analysis on Sofi. We're going to be doing the technical analysis. We're going to be looking at their investor relations page. We're going to be looking at the growth that they've had in the past, the growth that they're projecting in the future, and the upcoming catalysts for Sofi Technologies and where the stock is looking to go into the future. So if you do enjoy and you do find this video useful, consider subscribing. It is free and it does help me out a ton. If not, thanks for watching anyway. On to the video. So Sofi is short for Social Finance. It's an American online personal finance company. It was a mobile-first service that was based in San Francisco, and it provides a suite of financial products that includes student loan refinancing, mortgages, personal loans, credit card, investment and banking through both their mobile app and desktop interfaces. Over the next few months, they are expecting to get a bank approval, a bank charter, which means that they will be approved to be a lending bank, and that will increase their operating margins and be very beneficial for the company in the long run. It was founded in 2011, and as of 2018, their CEO has been Anthony Noto. So the first thing we're going to be looking at is Sofi's featured presentation, which is their Q2 of 2021 summary results. So here we can see Sofi's mission is to help their members achieve financial independence to realize their ambitions. Their members have had 8 consecutive quarters of accelerating year-over-year growth, from 704,000 members in Q1 of 2019 to more than 2.5 million members in Q2 of 2021, which is a 113% increase year-over-year growth there as well, which is a very good sign for the company. On top of that, their products have also accelerated their year-over-year growth. They have their products up 123% to 3.7 million products, which is an increase of 2 million year-over-year there as well. So they had 782,000 products in Q1 of 2019, more than 3.6, almost 3.7 million products in Q2 of 2021, which is once again exponential growth and very good for the company there as well. The Galileo accounts have had 100% year-over-year growth in the last 4 quarters. So we can see in Q1 of 2019, they had 17 million Galileo accounts, but in Q2 of 2021, they have 79 million Galileo accounts, which is 119% year-over-year growth from Q1 of 2020, where they only had 30 million Galileo accounts there as well. Their lending and financial services products, their lending products have gone 14% year-over-year to 981,000 products. And their financial service products have had 243% year-over-year growth to 2.6 million products, up from 601 million products in Q1 of 2020, which is once again a very good growth sign for this company there as well. If we look quickly at their 2021 financial review, we can see that their quarterly performance, that they had an adjusted net revenue of 237 million, which is a 74% year-over-year growth. And this is the 4th consecutive quarter of positive adjusted EBITDA of 11 million, which is a 35 million year-over-year growth as well. So you can see in Q2 of 2020, they had a negative 24 million quarterly adjusted EBITDA. But now in Q2 of 2021, they have a positive 11 million, which is a 35 million increase year-over-year, which is once again a very good sign to where this company is heading into the future. Looking at their annual performance, we can see that their annual adjusted net revenue in millions has gone up from 621 million in the financial year of 2020 compared to 852 million in the last 12 months. And their annual adjusted EBITDA in millions have gone from negative 45 million in 2020 to a positive 61 million over the last 12 months. Over here, we can see they have consecutively increased their customers. They have consecutively increased their products, and this has had a direct correlation to their increase in net revenue and EBITDA over the past few years, greatly increasing from 2018, where they only had 241 million. Now they have 852 million, which is close to a 3.5 times increase there. And from 2018, they had negative 222 million annual adjusted EBITDA in millions, and now they have 61 million positive, which is once again a very good sign. Their non-GAAP results versus their guidance. So in quarter one of 2021, they had an investor guidance of in between 215,000 million to 220,000 million. To now, then they had 237,215,000 in quarter one of 2021, which is their actual. And now looking at their upcoming ones, they're looking at 22,000 on the low end and 17,000 at the high end, which is a 10% and 8% beat based on the guidance that they are expecting. Their annual adjusted EBITDA, once again, they're looking at 19,000, which is an 8% beat, or a 9,000, which is still a 4% beat, which is still a very good sign with the guidance that they're giving for quarter two of 2021 on their non-GAAP results there as well. Their operating segments include their lending, which including student loan refinance, personal loans, home loans, and in-school loans as well. They have Galileo, which is their technology platform, which just consists of Galileo. And then they also have their financial services, which include Sofi Money, Sofi Invest, Sofi Credit Card, Lantern, Relay, Protect at Work, and ECM and advisory services there as well. In quarter three of 2021, their non-GAAP guidance is 245,000 on the low end compared to 255,000 on the high end. And note that this is in thousands. So that is 245 million to 255 million based on how much they are expecting to get. And their annual adjusted EBITDA will be on negative 7 million on the low end to a positive 3 million on the high end there as well. And this was because they had a moratorium on the federal student loan payments, which is not ending on September 30th of 2021, which was originally anticipated. And this was extended, which would obviously hurt SoFi's lending businesses quite a bit in the short term, which is why they have a slightly lower expected EBITDA in quarter three of 2021. Their 2021 non-GAAP guidance is that they're looking at 980 million, which is a $50 million in adjusted net revenue, which is a 58% annual growth. Their contribution profit is 266 million, which is a 27% contribution margin, and their adjusted EBITDA is 27 million, which is a 3% increase on their adjusted EBITDA margin as well. So they are looking at a very, very good 2021 based on their current guidances. They do reiterate that their original 2021 full year guidance, despite the impact of the unanticipated extension of the CARES Act moratorium of federal student loan payments, which is an estimated 40 million revenue impact on them, and not having the 12 million of the previously anticipated revenue from our equity investment in Apex, but they are still expecting a very good year in 2021 guidance there as well. The next thing we will be looking at is this investor this article looking at SoFi Technologies. It reads that strong growth can drive re-evaluation. So the summary of this article is that SoFi's platform is growing rapidly and the monetization of customers is improving. Their member growth and new product rollouts are expected to drive SoFi's revenue growth in many years, and strong revenue guidance are in place and the stock has more upside to come. So SoFi's platform is growing rapidly and is set to become the homes of millions of more customers in the near future. SoFi added 279,000 new members to its platform in the second quarter, and it ended the quarter with a total customer count of 2.56 million, which is more than double what it had in the earlier period. The COVID-19 pandemic accelerated SoFi's growth significantly, and the personal finance company added a total of 1.47 million new customers to its platform over the last 5 pandemic quarters, which calculates to an average monthly acquisition of 98,000 new accounts. During the same 5-quarter period right before the pandemic, SoFi was acquiring about 29,000 customers per month, which means that the pandemic fueled SoFi's account growth by a factor of 3. It is estimated that SoFi could reach 3.16 million customers by the year end, and assuming the firm can acquire 100,000 customers per month between quarter 3 of 2021 and quarter 4 of 2021 there as well. So we can see their member growth. The period of pandemic member fuel growth had a year-over-year growth of 59% in quarter 2 of 2020, going up to 74%, 90%, 100%, and 113% all the way up to quarter 2 of 2021. SoFi's ambition is to offer its customers a complete suite of lending and investment products that removes the need for people to have multiple accounts with multiple financial institutions. To meet the needs of its customers, SoFi has rolled out new products designed to position the platform as a financial or lending one-stop shop. The launch of the new products such as credit cards, loan refinancing options, and cryptocurrency trading is drawing new people to SoFi's personal finance ecosystem, and it also generates significant cross-selling potential for the fintech, which increases the lifetime value of its customers as well. So they have introduced quite a few member-centric powers to the entire financial relation by their cross-buy platform. So they uniquely offer a full suite of financial products all in one app. So their timeline is in quarter 1 of 2019, they released SoFi Money. Once again, in quarter 1 of 2019, they released SoFi Relay and SoFi Invest as well. They introduced home loans, in-school loans, credit cards, and SoFi Rewards all over the last 24 months. So over the last 2 years, they have released quite a few new services, which would definitely make it a better one-stop shop app for a lot of customers, especially with a lot of customers now having to deal with multiple financial institutions, causing a lot of problems for them. This would definitely make their life easier, which is one of the reasons a lot of customers recently, over the past 5 quarters specifically, have started to go a lot faster towards SoFi, which is a very good sign for the company there as well. So adding new financial products to its product suite has led to a massive increase in customer uptake, which SoFi measures through its multi-product member accounts. To see how good SoFi is in selling more than one product to its customers, we can look at the number of multi-product users. As the name implies, these are customers who use multiple services or multiple products, such as a mortgage loan with SoFi, and then later on also used to refinance to an auto loan with the company or sign up with SoFi's credit cards. So here we can see the total product had a 77% year-over-year growth to 4 million total products in 2021. And then multi-product members have actually gone up to 775,000, which means that more members are coming to the company using more of their products, but also more members are using multiple products that SoFi is offering, which is a very good sign and will definitely help the company in the long run there as well. To the clearest indication that SoFi is making progress with the platform is that it's able to turn and is about to turn EBITDA positive. While SoFi has prioritized user and platform growth to expand quickly in the past, SoFi is poised to have its first official year of profitability in financial year of 2021. SoFi generated $621 million in revenue in financial year of 2020, and its guidance for revenues in financial year of 2021 is $980 million, implying a year-over-year growth rate of 58%. The revenue growth rate from financial year of 2019 to the financial year of 2020 was 38%, so revenues are definitely ramping up quite nicely. SoFi was EBITDA negative in financial year of 2020, but the losses have narrowed materially last year due to the pandemic-driven customer surge and improved customer monetization as well. SoFi expects to generate $27 million in EBITDA adjusted this year, and I believe this is the massive ramp in members and sales could drive the stock returns for SoFi quite positively over the next 12 months. So this is another article talking about why SoFi is a steal right now under $20. Some of the key points is that SoFi is a financial tech company that offers a range of financial services for consumers and digital finance companies. The company is also in the process of obtaining a bank charter, and SoFi has doubled the number of users or members in the past year. So SoFi is an online personal finance company. It's been around since 2011, but it went public earlier this year through a SPAC. It was first established as a student loan specialist, but it has branched out into banking, personal loans, credit cards, mortgages, personal finance tools, services, and investing through its platform. It is in the process of getting a bank charter, which would give it something else in common with Square. Once it's get its bank charter, it gets access to certain banking capabilities. It could take deposits, expand its loan offerings, and engage in other related activities as well. It has acquired a small bank in California, which is Golden Pacific Bancorp, earlier this year to ease the process, and the charter is expected to be granted by the end of this year. In addition to lending and financial services, Sofi has a third business line helping other companies provide their own digital banking products, and it provides front-to-end and back-to-end functions, including direct deposit, account setup, funding, automatic clearing house transfer, interactive voice response, bill pay, transaction notifications, point of sale authorization, and other capabilities that it has. And it brought this into its business through its acquisition of Galileo last year. And that has come to close to 70 million users this year as well, and is growing very, very profitably there as well. Currently, Sofi's lending business is its biggest revenue generator, but the financial services and technology arms are the fastest growing. In the second quarter, the leading revenue was up 73% year over year to 166.3 million, while technology revenue soared 138% to 45.3 million, and financial revenue exploded by 602% to 17 million as well. Overall revenue was up 101% to $231.3 million year over year. This other article is about 3 no-brainer stocks to invest $500 right now. This is specifically talking about Sofi. It's formerly under the radar niche lender. It's morphing into multifaceted personal finance service providers. Similar to Square, it is an investor darling in the fintech space this year. Their service transacting user roles have not only been growing, but the growth has been accelerating. In the second quarter, user growth was 113% year over year to nearly 2.6 million people, up from the growth of 110%, 90%, and 74% in the past 3 quarters. Many young companies achieve high growth metrics for a time before their expansions peter out, but Sofi has consistent ability to accelerate its growth, is rare and very good for the company there as well. Its Galileo offering, which they acquired last year, also has quite a lot of enormous potential. It describes the system as it enabling critical checking and savings account-like functionality, provides companies with an easy way to create sophisticated consumer and business-to-business financial services. In each of the past 4 quarters, the company has grown more than doubled the number of Galileo accounts on a year-over-year basis. And with the platform's rapidly growing client base, Sofi could be the go-to fintech partner for many companies. On top of this, Sofi is close to obtaining its own banking license. This would be great to streamline its operations in that sphere, because it would allow the company to jettison the partners that it now relies on and compensates for such services. Revenue development for the company has been quite choppy, but it is generally on the way up, and with the non-GAAP and adjusted net revenue is notching a new record for quarter 2. Although it's not yet profitable, Sofi has posted 4 straight positive quarters on every tech-heavy company's favorite financial metric, which is adjusted EBITDA. The lack of profitability, the relative newness of Sofi as a stock, and the overshadowing popularity of Square in the fintech space are the factors that are keeping quite a lot of investors from opening up positions in Sofi. Yet it is installing many levers that it can pull up for revenue, so it is quite a good stock in the long run there as well. The last thing we will be looking at is Sofi's technical analysis. There's not much to look at because it's only been on the market for about half a year, slightly more than half a year, but we can see how volatile the stock has been. Another thing I would like to point out is that anytime the stock greatly breaches its 20-day simple moving average, it does crash back down. So we could see it was way above here. It did crash back down. It was way above here. It came back down. And over the past few months, it has basically had its 20-day simple moving average as kind of a ceiling. Anytime it hit that, it kind of rebounded, hit that again, rebounded, hit that again, rebounded, and now it hit that again. But recently what's happened is that the stock has breached its 20-day simple moving average. It did come down again. It's now trading at basically its 20-day simple moving average there as well. So the stock has been quite volatile, but with it as well, it has had quite positive earnings. It has a very good guidance for its 2021 earnings reports there as well. So overall, I do believe SoFi is a very promising company. Today, we looked at their bank charter. We looked at their upcoming guidances. We looked at the technical analysis, and we did look at catalysts that SoFi could use to go in the upcoming future. So I hope you enjoyed. This brings me to the end of my video. And if you did enjoy, consider subscribing and leave a comment what you think about SoFi Technologies, and I'll see you in the next video. Thanks for watching.